All right. Let's get comments from Mayuresh and Ramesh are also joining us this afternoon. Mayuresh, markets are finally looking like they're on even keel after quite a choppy week. What's your outlook going ahead now?
Afternoon, I think the determining factor has been China so far, and clearly that will continue to be an overhang onto the markets along with where crude prices are heading in the near future. Having said that, probably on the domestic side, the revival in corporate earnings has got pushed back to the first half of FY17. So at least for the next 2 quarters, you're not expected to see earnings recovery happening in the Indian markets. Along with that, I think you're probably expected to see the capex cycle also taking that amount of time. So clearly, I think whatever happens in the budget session is what the markets will be looking out for domestically. So I think the volatility in the markets will continue and will be governed more or less with all these events going forward. So our own take is that there is every possibility that the markets might correct even from the current levels. But clearly I think such corrections offer good opportunities for investors to actually look at qualitative stocks which have corrected very recently.
Okay. Dharmesh, on the technicals here, seen a little bit of a rebound, but will this sustain or you believe shorts will once again start coming in, let's say next week?
See, my own sense is that we are in the last leg of this downturn. Maybe this recent fall led by China-related issues is more to do with technical fall in the market. But if you look at the historical weight of evidence, whenever there has been a fall in the market because of the China regions, the markets have rebounded sharply and was back in the bull trajectory. I think as we head into the earnings season, the markets will collect here. So maybe a couple of 100 points more on the Nifty is the maximum downside. I don't see market reaching 7400 or 7350 on the Nifty. But as we head into the earnings season, what will determine the further trajectory of the market is what's the operating efficiency, I mean the operating profit margin which the companies are going to report, and whether there is an increase in the operating efficiencies and capacity utilization. Those are the two parameters which I think the market would be observing into. But more or less, there are plenty of factors, positive factors which are waiting down the line, be it the fall in the crude prices or the fall in the commodity prices. All these are tailwinds for India, and the currency has been very stable. If you look at the currency, there has not been any sharp depreciation in the Indian rupee. Again, my own take is that maybe on this RBI policy, we can even get a 50 basis point rate cut. If you look at the core sector industries in the month of January, that was really a bit of alarming. So there is a very big case for giving a stimulus to our own economy, particularly in the large caps segment where there has been enough of capacity which has been underutilized. I think calendar year 2016 will be a year of capacity utilization, then a capex building. So existing companies where there is a revival growth, those are the areas to be looked forward into. From the perspective of Nifty levels, I think 8,000, 8,200 is where we should head to in January.
All right. Let's in fact just pause for a moment there. We've got some news coming in with the government preponing the switch to BS6 norms. We've now learned exclusively that OMCs are lining up some mega capex plans to upgrade their refineries. Twesh is joining us on the phone line. Twesh, take us through what you've learned.
Well, yes, India's PSU refineries will be reworking their capex targets to meet the government's plans to roll out BS6 grade fuel a year earlier. Now, so far as Indian Oil is concerned, Indian Oil will be investing around 12,000 crores. Hindustan Petroleum, HPCL, will be investing around 4,000 crores. BPCL is likely to invest around 5,000 crores. MRPL is likely to invest around 4,500 crores. CPCL, that is Chennai Petroleum, will have to invest around 1,000 crores, whereas NRL, that is the Numaligarh Refinery Limited, will have to invest around 2,000 crores. In total, the government is looking at a capex of around 28,750 crores in order to ensure that the Bharat Stage 6 fuels grade is available across the country from April 1st, 2020. Back to you.
All right, Twesh, thanks for getting us those updates there in terms of what we're seeing as far as some of the investments of a couple of these OMCs are concerned as well. All right, talking about the OMCs and the way some of the oil and gas counters have been moving, Mayuresh, Reliance Industries and the OMC pack also today has shown some good strength. Any thoughts on these developments, both for the upstream and the downstream companies?
Clearly what is happening, Priyank, is with the cess and the odd valorum getting applied there, I think it would benefit the companies when numbers are concerned, at least from an FY16 perspective. However, I think with the kind of fall in prices that you've probably seen, specifically in the case of ONGC, for example, I think you're probably going to see the profitability of OEL getting impacted in a big manner. So again, I think the volume growth is something that one really needs to look out for, and clearly that is going to impact the margins and the earnings upgrades for these companies. For Kane, probably I think the story becomes a little bit more deeper, because I think the overhang with the tax issues, the Vedanta merger is something playing out, and though I think the stock is attractively valued with the cash position itself accounting for around 110, 115 rupees of the stock price, I think the other concerns probably will create an overhang onto the stock. For Reliance, I think our positive attitude or our positive momentum continues. Clearly with the capex plans both on the core business almost nearing completion over the next few quarters, the non-core capex on the telecom part clearly getting through. Our own take is that the ROEs, which were suppressed below 13%, should start improving going forward, and within the core businesses itself, petchem and refining, I think both should see robust earnings growth going forward. So Reliance is something that we are extremely optimistic about on the upstream pack. On the downstream part, probably I think IOC is something that we'll continue to like. I think with the new commissioning expected to come through on Paradeep, the Nelson complexity of 12.2 will ensure that the GRMs improve going forward, which will again have tailwinds in terms of their margins improving from 2.1 that they posted in FY15 close to 5.5% in FY17. So clearly I think IOC on declines is something we continue to prefer within the downstream pack.
Right. Mayuresh, what's your call on Sun Pharma? Up today on that, a buy call being retained by CLSA?
So clearly, I think we remain optimistic on the stock, and clearly I think most of the negatives that Sun Pharma has gone through, whether there will be network integration issues with respect to how Ranbaxy's integration will pan out for FY16, what probably happens with the resolution of plants including Halol. I think a lot more has got gestated into the price at the current juncture, and approvals again in terms of Gleevec coming through. I think the EPS should be comfortably placed at around 28.5 rupees for FY17. So clearly I think most negatives priced in, you're probably expecting earnings recovery to start happening, and even on a consolidated basis as far as the domestic operations are concerned, with the Ranbaxy merger, Sun Pharma is in a very strong position with 9.3% of the domestic share, followed by Abbott, which is around 6.2, 6.3%. So clearly I think we're expecting good amount of earnings to come through over the next 2 years. We still expect an EPS of around 28.5, as I said. So clearly we're still maintaining a target price of 950 over the next 12 months for Sun Pharma.
Okay. Technicals, Dharmesh, on this one?
I beg your pardon, normally I don't track technical, so I won't be able to comment on the Sun Pharma technical.
Okay, no worries. Let's pull up another one that's been active today, or rather the entire sector that's been moving, Mayuresh, has been the sugar sector. Now this one probably is taking a cue from those international prices or the kind of jump that we're seeing. But let's look at the whole pack. Sri Lanka, 8%. You got Balrampur. You got a whole slew of these names that have been buzzing not only today but Mayuresh, over the last couple of weeks now. You're seeing somewhat of a case of a re-rating here. Are you buying into this kind of change of sentiment when we talk about sugar pack, or you believe this is going to be short-lived?
So clearly, I think the momentum already has happened, Priyank, over the last few months. And clearly, if I talk about how the structural shift is happening, you're probably looking at the harvest from Brazil being much lesser, which has obviously pushed the raw sugar prices in cents much higher. Even on the domestic side, you're probably seeing firming up on sugar prices happening. And again, sugar cycle is typically a 2-3 year on-off cycle. So in the next sugar harvesting season or the crushing season for the next fiscal, you're probably going to see, I think, the output being much lesser than what we're probably expecting this year. And again, I think let's remember, I think we had a carryover inventory of almost 8.59 MT of the last season that came through. So even if you take into account the mandatory exports of 3 million odd tons expected to go through this year, you're probably still looking to see over excesses in terms of inventory being carried forward in the next year. However, I think once the sugar cycle changes in the coming fiscal or the coming sugar season, our own take is that the sugar prices should either sustain at the current level or marginally improve. So clearly, I think the sugar company's dynamics should turn for the better over the next 2 to 3 years. And clearly, clearly whatever happens in terms of the subsidies that are remaining to be paid, probably to the sugar companies, I think if there is some amount of clarity that comes through from the government side, both the UP government as well as the central government when it comes to the fixing of prices, both FRP as well as the state control prices, I think there will be much more clarity in terms of how cash flows will pan out. So clearly the investors holding on to stocks at lower levels should continue to hold that. But again, let's be very clear that the sugar cycle takes 2 years and the sugar cycle will begin in the coming fiscal.
Ramesh, let's get your call on some of these tech counters. Earnings, we're counting down now. What's your expectation this time around?
See, IT pack is likely to be muted. From earnings perspective, we don't see any major surprises coming in, whether it is positive or negative, because most of the companies, be it Infosys, TCS or SCL, they are going through a transition period where the shift to the newer products and high margin products and the shift to the digitization space will be more key factor to be watched out for, and the management commentary. What we feel is going into the earnings season, since we are not expecting any negative surprises from any of the big boys from the IT space, so more or less some buying will be seen there, but at best for this year, I mean for next 1 year to 1.5 years, IT and pharma space will more be a trading place rather than a structural bull market where you can carry on with a compounding growth story in place. So that is not the scenario in IT as of now.
All right. So that's as far as the IT pack is concerned and what we're seeing in terms of the way some of these counters have been panning out there. But Larson's down 2.5%, and this one's taken a major knock. Once again, just pull up the counter. I believe it's around the day's low for L&T. Dharmesh, any views on L&T?
Yeah, definitely. See, as far as the price action is concerned, I think the L&T is very attractive. Below 1200 is always a good buy. What has been plaguing L&T has been a drop in their margins. Operating margins have been falling significantly, and even the PAT margins, because of the overhang on the debt side. Basically, working capital stress has been seen. Further, they have significant exposure in Middle East, where the problems are already there, geopolitical issues. So there may be some execution delays as well. But if you have a bet on the Indian economy, and if you have a perspective that 1 year or 2 years down the line things will be there and things will start improving and we will be back on a good growth trajectory, and so L&T is the only preferred bet where you can put your money as far as infra and construction space is concerned. So what we are recommending our clients to have a investment view rather than a trading view in L&T, and at every level below 200 we are recommending a buy on L&T. Still at 19x 1 year forward earnings estimate, that is FY17 estimate, so that is reasonably cheap. If you go by mean average of L&T, it's 25 to 26x. So margin of safety as well as valuation comfort is also there.
Alright, so that's as far as L&T is concerned. Mayuresh, cap goods really has been a pretty stress point here. L&T, BHL also been struggling for some time. How are you positioned here when we talk about L&T and BHL?
Clearly, I think the entire sector is going through stress, and that's been very, very evident in terms of how the margins are panning out.
Alright, seems you got disconnected on the line there with Mayuresh. We'll just try and reconnect with him, but nonetheless we're also getting the market closing quotes up. Just 1.2 minutes to go for the markets to close for trade today. Now, after seeing 4 consecutive days of decline and having one of the worst weekly performances, you did manage to scale back a little bit today. Some bit of a rebound seen across Asian markets. The big question next week again will be how much of this can really be sustained, and if we'll again start dwindling or not to come next week. But so far on this Friday trade, markets are slated to close higher by nearly 0.5% is what we're seeing in terms of the way the market action is really panning out. Talk about the stocks that were on the move. You got a slew of counters actually supporting the index today. Tata Motors and Tata Power really stood out in that sense as well as far as market performance is concerned. Among the gainers that we noticed in terms of trade today, just pull that space up for you and get a quick mention going on that as well. Tata Power up almost 2 to 3% is what we noticed in terms of the way it's really panning out. And remember, after seeing almost 3 consecutive weeks of gains, you're slated to see one on the negative side. Talk about some of the gainers. Tata Power, Tata Motors and Tech Mahindra all gaining. Power Grid, BPCL, Yes Bank and IndusInd also among the gainers. Now ONGC pack has been, the oil and gas pack has been pretty active. ONGC in that showing some bit of strength as well today. And Reliance Industries, remember, which has been one of the major outperformers over the last month or so, was up 1.4%. HCL Tech, Bharti, HDFC Bank, all seeing good gains. M&M, Grasim also showing strength. Ambuja was up and about. Now, that's where you saw some bit of strength coming in. But among the weaker names, L&T, top loser, 2.5% lower. Cipla, Bajaj Auto, Adani Ports and Coal India, all seeing some cuts here. And where a couple of the top losers are, was what we noticed. But all in all, it's been a little bit of a recovery trade here after seeing 4 days of cuts. On Friday at least, some cheer coming in, and the index closing about the 7600 level.
Yep. Okay, let's take a look at some of those mid caps as well. A couple of themes that played out. So sugar, for example, as a theme played out nicely today. Everything on that front. In fact, the entire agri-commodity pack, so EID, Tata Coffee, Barampur, Bajaj, a whole host of those names were moving in trade. Apart from that, we had the entertainment counters as well, post the Netflix launch, so that whole bunch as well moved out. Shemaru, for example, up 15%. So those were a couple of themes that played out. That apart, market breadth was still incredibly positive, and a whole host of counters that ran up in trade and across industries. Godfrey Phillips, Muthoot Finance, Oberoi Realty, Manappuram Finance, India Cements, some of the names there on the upside, just to name a few. JM Financial, Genesis Power, Electro Steel on news. Also moving today. So quite a few of those counters that we did see traction coming in. But sugar definitely one of the top themes. Suzlon saw some buying, DLF by the end of the day. Midcap Realty, in fact, also Reliance Power was another one there. Subex also that did see some amount of buzz coming into trade. So a couple of these counters. Aptech is another one there that we saw some buying in. Some of those midcap infra names, GVK for example, Reliance, another one. All of them also did see action. In fact, the entire ADAG pack continued to buzz as it has been. Adani Power, again from the power pack, was also moving today. So a whole host of those names and market breadth definitely seemed to be back in action. You know, Mayuresh, we were also wondering in terms of some of the counters that have seen a bit of a seesaw this week. I mean, take a look at the Tata Motors, for example. All kinds of various news coming in, and of course on the back of China first, seeing a bit of a hit, then rebounding today, and quite nicely at that. What's your call on some of these names going forward?
So clearly, I think 15% is what the contribution of China is to Tata Motors, and it's largely been offsetted with increase in volumes happening in the North American markets. Clearly, if you assume that JLR margins stay in the range of 12 to 14% for the better part of FY16, and
Dharmesh, if you're with us, and we seem to have lost the line to Mayuresh, but the same question to you as well. Some of the pockets that have seen a bit of a seesaw, like some of the auto names that you know, were hit on the back of sentiment today, bouncing back and quite nicely. Even M&M seeing a bit of a spike towards the end of trade. What's your call going ahead on some of these names?
See, as far as the auto segment is concerned, one has to be, very careful and stock specific. My own sense is that stocks like Tata Motors is still a good value buy in spite of the China problem which is in, and the negative and positive news flow coming to and fro. But going forward, the way the JLR sales have picked up in the US and UK is a big positive for Tata Motors, and in India, both LCV and MSCV segment has been picking up. Apart from there, they have few passenger vehicles launches in India as well. So on the whole, it does look like a very attractive buy at any fall in the stock price, and our SOTP base target for Tata Motors is 500 by FY17 end. So Tata Motors is a buy from the auto space, and second would be from the two-wheeler space, that is Hero MotoCorp. So any correction if there is there in the price of Hero MotoCorp, we are advising our clients to go along on it, primarily because the company has been doing good, and I think as the 7th pay commission rolls out and there is more money in the hands of the consumer, they would be buying two-wheelers, particularly in the Tier 2 and Tier 3 cities. And Hero MotoCorp has a couple of new launches as well in the segment which is price sensitive. So going forward, I think 27,800 is the FY17 price estimate on Hero MotoCorp. So more or less, if you are stock specific in this year, there are good attractive opportunities from the large cap space.
All right, gentlemen, we'll leave it there. Thanks so much for joining us on the show today. We need to take a very quick break. When we come back, shopping for kids being made easy by one of the bigger startups in that space. We'll talk to founder of First Cry, Super Maheshwari, on Rising Stars.